Hello, and a very warm welcome to this Master Investor Monthly Mashup with myself, Sarah Lowther, and Jonathan Davis, author, investor podcaster, editor of the Investment Trusts Handbook, and colleague at Master Investor. Well, this month there's going to be lots of numbers bandied about. 13 years of the Conservative Party. Could this be their last year in office? And the cost of national debt hits a 20-year high, and other stories. So, Jonathan, let's talk about debt. The interest the government's paying on national debt has reached a 20-year high. National debt for the UK currently about £2.6 trillion. I say this as though it were a mere drop in the ocean, but it's significant. So how worried should we be? And which investors could benefit?
Well, nothing like starting with a big number and a big question, Sarah. Of course, it is a big number, and I think the actual number itself, lots of noughts on it, doesn't really mean much to most people. But the normal way to look at it as a percentage of GDP, in other words, of the size of the economy, and it has hit a new high there as well. It is something well over 100% now of GDP, and that's that's the official numbers, as it were. Some people believe it's higher than that. So this is a big problem, because if you combine higher debts with higher interest rates, that's going to eat up more and more your budget, and that's one of the reasons why the Tory party is having to, or the Chancellor's having to, put up taxes and rein back on spending, including possibly HS2 and other things like that. So yeah, it's a big problem, and I think it's only you reap what you sow. Shall I put it that way? We've had this long period of low interest rates, cheap money. Money for nothing. And that just leads people into bad habits, and particularly governments, which like to spend money. If they can borrow, very cheaply, they just splurge it away, and there has to be a reckoning, and there will be a reckoning. So number one, not good for investors. But number two, how can you take advantage of it? Well, I can tell you what most people are doing. They're just putting their money into the bank, or not into the bank, but into money market funds or into government bonds. Ironically, the government is desperate to borrow more money, and people are giving it lots more money. That may not work out so well, but in the meantime, you're getting 5% or something on a gilt, a short-dated gilt, which is a lot better than it was. You're still getting very little on the bank from your bank account, but you can get quite good rates by shopping around on some of the investment platforms. So basically, in the short term, yeah, that looks like a good place to be.
So we talked about the Conservative Party. So they're holed up in Manchester, about to possibly tell Manchester that it isn't going to be levelled up in the form of an HS2 extension, and there is a huge chance, she says, that the Conservative Party will not be in government next year when there's a general election. A lot of people are saying the Labour government is waiting in the wings to take over. But in terms of investors, investments, sectors, are you seeing people repositioning their business strategies or their investment portfolios in anticipation that there will be a regime change next year?
Well, I think everybody, investors, companies, even in government themselves, confidently expect that there will be a change of government next year. It's very normal. The Tories have had 13 years, and that's typically about the time they tend to have. And they always reach the end of those sort of periods pretty exhausted, and people are ready for a change. Whether that change is going to produce any significant improvement for the people who vote for them is another matter. I think because whoever does win the next election is going to inherit the same problems that this government's got, which has a lot to do with the things we've just been talking about, which is the public spending is out of control. Taxes are having to be put up, and the interest rate costs are eating up more and more of the budget. So the numbers just don't add up. So whoever wins the next election, there's going to be no immediate improvement in things for people, I think, and that's clearly what Keir Starmer and co are saying. So yes, change of government, but let's just bear in mind, what a radical change we've had in the last 4 years. Since Boris Johnson won, admittedly against Jeremy Corbyn, we've seen a complete change. Both parties are moving towards the centre. competing for the centre ground. But it's a very big change, and it just shows that people who say, when he won the last election, oh, well, he can look forward to 10 years in power, they always say that. Absolute nonsense. Doesn't work that way. But yeah, people are preparing for changing government. But the real problem is that the really worrying things are global rather than UK centric. I mean, we've got our own problems, but they're not. The bigger factors of a slowdown in the world economy is going to be far more important for what happens to people's living standards than what any government does.
So before we look at the globe in its entirety, I'm just thinking about Europe. So I took my first flight recently. I haven't been very far since lockdown, but I went to Nice for a couple of days recently, nothing to do with the rugger, but to support my cousin who was taking part in the World Ironman Championships, and he did very well. He was the first Australian to cross the line, but my passport was stamped. My new passport was stamped. And then last week, I sent someone a gift to Dublin, and I was horrified because I got to the post office and they said, well, have you filled out your customs form? And I said, what? I said, it's just Dublin. They went, yes, but you now have to fill in a declaration form. And unfortunately, this present was a gift, but I had to reveal the contents, how much I'd spent on this gift. And the queue behind me at the post office, a lot of people were very disgruntled with me, and I almost got thrown out because there was an expletive came out of my mouth because I was cross with myself because I hadn't been aware that I was going to have to fill in a customs form to send a scarf to Dublin. But I didn't vote for Brexit, and it saddens me.
Right. Well, this is one of what we call the trade frictions that happen when you're not in an economic union with or customs union with other countries. So that is one of the negatives of Brexit. But you could say, well, I don't mind having my passport stamped. I've had it stamped quite a few times now. It's quite like the old days when you presented your splendid blue UK passport, and imagine that people gave you a slight sort of cough of the doffing of the cap because of the UK's great reputation around the world. Probably not the case now. But yeah, of course, that's a minor negative. It's an irritant more than I think the end of your world, Sarah. But let's be clear about that. But how nice to go to Nice. I mean, Nice is a lovely place, and France is still such a wonderful place to visit. I mean, I go there frequently, and it's not so bad at the queues just to get into the country and out of the country. It seems to be working a lot better. So I'm not too worried by that. But I don't go for Ironman contests, though. I'm afraid my Ironman days are long gone. I'm more kind of lifting wine glasses is more my kind of scene.
Yeah, it took him 10 hours, 31 minutes, non-stop activity, including swimming, cycling and running. And I just said to him, what are you running away from? So in any case, I found it very upsetting. There was far too many athletes becoming quite unwell. But when I was in Nice, it was busy, but not as busy as London. So I was in London last night. I was in London a month ago. And town is busy. So it is the beginning of the Chinese autumn festival. So I saw a lot of tourists visiting from Asia, but it's the busiest I have seen it since pre-COVID, pre-lockdown. So the restaurants were full. There was queues outside the doors of all the cafes. So I was thinking, this is extraordinary. So the hospitality sectors and the visitors coming to the UK, that hasn't diminished.
Well, it's true, and in particular, I mean, the Chinese have been coming here in large measure because they've just come out of lockdown for the first time in 3 years or something, and so there's lots of them coming over to England, which is good. You're right. It's very bizarre. I mean, I've been to London a few times, and it is absolutely buzzing. I was astonished when at 5 it was like the old days back in the city, because 4:30, 5 o'clock, everybody was standing outside the pub drinking, which is a sign of what used to be. But I don't think that's true around the country. I mean, if you look at the statistics, pubs are closing all over the country. In Oxford, it's quite difficult to find a pub that's actually open 7 days a week now. A lot of them only open, Thursday to Sunday or something like that. And of course, if you go into the middle of Oxford, which is where I spend, see most of it, there's so many restaurants and cafes and hospitality venues, if you like. I mean, it's a miracle that there are so many, and you have to worry whether those are going to survive. It seems that people are still, they're a bit kind of not demob happy, but they're a bit kind of COVID happy, if I can put it that way. And they all made some money out of all the government handouts and things. They filled their bank accounts, and they seem to be spending it. I think it's good in a way. It keeps the economy ticking over, but it's not. It can't last forever. I'm afraid. I'm slightly gloomy about the outlook for both the markets and for the economy. But that may be just because I'm an old guy, and it's good to wring one's hands about how terrible things are. But I generally don't think so. But I do think it is, as you say, you've picked on a very interesting phenomenon: the fact that people are still spending, and particularly on eating out, going to the cinema, all those kind of things. Sort of in a habit, perhaps, for some of the younger generations.
So there is a cost of living crisis. So every afternoon, I help out at the local dairy farm, and the dairy farmer doesn't make any money from the milk he produces. It costs him 17p a litre to produce. He's offered 13p by those who take the milk away and then bottle it and sell it. So this coming month is the most important month for him, because we are selling the pumpkins that his wife and I sowed in June. So I remember when we sowed it, it was red hot in June. We prayed for rain. We got rain. We got rain for about 6 weeks non-stop. And we have got tens of thousands of pumpkins. And when we're picking, we're talking to each other about how much we should charge per pound per kilo, because we've got to anticipate what people are prepared to pay. So the majority of the pumpkins are large, they're heavy. And so we've been talking about this all week. What do you think the average mum and dad would pay for a pumpkin? So we haven't quite yet started the display, but we've got to decide soon, because we've got to market this huge event and tell people how much a typical pumpkin will cost them. So this is at grassroots level in the fields with our wellies on, how much will the average punter pay for a Mars pumpkin? And Mars pumpkins are the ones with the prickly stalks, the ones that the supermarkets sell, but ours are about 10 times the size. And then we do others like mashed potato, turbans, crown prince, things like that. So that's what's distracting me in the afternoon when I'm not in London.
I thought you were going to ask me, rather like politicians get asked what the price of a pint of milk is, you're going to ask me what the price of a pumpkin was. And of course, I'd have absolutely no idea. But I guess the question then for you is, I mean, if they've been good pumpkin growing conditions for you, are there going to be lots of pumpkins around because everybody else has had the same pumpkin experience? And probably more importantly, what are your costs? So, you want to, I imagine you're not doing this as a charity, right? You've got to kind of maximize your margin. You'll be finding out whether you've got what we call, pricing power or not.
Yeah.
So yeah, be very interesting to see. I don't know, give me a clue. What sort of range are we looking at here for a pumpkin? Is it measured, is it just per pumpkin, or is it presumably something to do with the weight of it?
It is to do with weight, and you're absolutely right. The growing conditions for pumpkins have been phenomenal, and we've seen that in the next county that some farmers are already selling their pumpkins. So we've got to hurry up, but it is absolutely backbreaking. So you were saying that you were gloomy about the outlook for the markets, etc., but we are supposed to be giving investment ideas. Now the pumpkin market, it's saturated, so don't go into that. So you can just put that to one side. So what are the solutions? You've been pretty gloomy all year, to be honest, Jonathan, about the markets, but there must be opportunities there that we can share with people watching and listening.
Well, I think, let's be clear about this. If we are heading into, I mean, I think what this year has been about has been actually, it's been kind of a reckoning postponed, shall we say, for some perhaps explicable reasons that, a number of people have missed, and perhaps I'm one of them. But I think there is a reckoning coming due. Because interest rates are going up and they're still going up, and the bond market is still saying bond yields are also still going up, which is good for people who who are looking for ready sources of income, but it's not good for the rest of the economy and the rest of the markets. Historically, that's always been the case. Rising bond yields are not good. And this old saying, the Federal Reserve will go on tightening until something cracks. I suspect something is about to crack in due course. I don't know when, I don't know where it'll be. So the basic stance, I think, has to be one of caution. So you've got to be very careful. And it's not easy to find places at the moment which look attractive. One of them, though, is the field that I've specialized in, which is investment trusts, where we have seen this extraordinary derating, in other words, discounts widening on a whole range of investment trusts. We haven't seen anything quite like it since the global financial crisis, actually, apart from the brief couple of months after the COVID hit. And so there are some chances, if you believe that these discounts are really telling you the right story, there are some really good opportunities out there. And in particular, I mean, one of the ones I quite like, the renewable energy trusts. They've been sort of reacting in a knee-jerk way to what's been happening to bond yields, and it's logical. They should their net asset value should come down when bond yields are rising. But a lot of them are now trading on big discounts. You get a very nice yield. Something like Greencoat UK Wind has a inflation-linked yield commitment, which it's going to keep, and it makes wind power. Even there's a lot of issues around wind power. That's actually a positive, because the worse the conditions are at the moment in wind power, the more likely you are to make money out of it when supply and demand comes back into balance. So I like those. What else do I like? Not much, really. I mean, I think, Japan looks interesting. The yen looks interesting because the yen is very, very weak, and I think has been, and that's classically what happens and has happened before. We've had crises in the past, and that's been a very good place to be if you expose yourself to the yen. But there are a lot of things around, and I really think that if you are, thinking that somehow we're going to go back to the post GFC world in the short term, where interest rates kept falling and everything went up, I don't think we're going to see that yet. But there will be a great opportunity. Maybe not immediately. Some opportunities now, but more likely next year, I think.
Okay, you've left on a high. What about your book, Jonathan, finally?
Well, I mean, I could be wrong, of course. I always could be wrong. That's one of the fun of being involved in financial markets, because they have the ability to confound everybody, even the smartest people. But yes, I'm just very close to finishing, sending off to the printer the annual investment trust handbook that I produce, which is a summary of all the things that have happened over the past 12 months. Lots of data, tables about performance. You might want to look away when you look at those, because they've been pretty bad with these big discounts appearing. But also looking forward to what might be happening next. It's an awful lot of work, but it's a lot of fun, and it's a good chance to take a rain check on what's going on around the world. And I'm happy to say it's been very successful. It seems very popular, and I went to an event the other day organized by JP Morgan. They had a day for retail investors to come and listen to what their fund managers have to say. And I was one of the interviewers on that platform. And there they were. There was asked for a show of hands, how many people actually listen to my podcast or buy this handbook, and quite a few arms shot up. So that was a bit of a fillip for me. So I'm hoping that we'll do just as well this year. But yeah, a lot of work, but hard work never killed anybody, did it?
It's a pleasure for me, as ever, to talk to you, Jonathan Davies. Thank you very much. And I'll see you next week when my back is less broken.
Well, good luck with that, Sarah. I hope you feel a lot better next time. And perhaps a bit of Ironman training maybe for you too as well would be good.
No. Thank you, Jonathan. Cheerio.